So, Wall Street wrapped up the week on a choppy note, but hey, at least it didn't end at the day's lows. Hey everyone, it's Saturday morning, November 8th, and welcome back to Capital Markets Quickie. I'm your host, Endrit Sella, here to break down yesterday's market action in just 2 minutes. Quick note before we dive in. Today's episode is brought to you by AMF Capital Asset Management Frankfurt. Learn more about our funds and strategies at amf-capital.de. Alright, let's get started. U.S. stocks clawed back from earlier losses on Friday as investors digested weak consumer sentiment data, more layoff headlines, and some political drama out of Washington. The Standard & Poor's 500 managed to inch up 0.1%, the Dow also added about the same, and the Nasdaq slipped just 0.2%. After spending most of the day in the red, markets got a little lift late in the session after Democrats laid out terms to end the government shutdown, but Republicans quickly shot the proposal down. The back and forth kept investors guessing, with the shutdown now weighing on both sentiment and data. For the week, though, it wasn't pretty. The Nasdaq posted its steepest loss since April, dragged down by the Magnificent Seven, names like Nvidia and Tesla, as investors started to wonder whether this whole AI rally might be running out of fuel. The Standard & Poor's 500 and the Dow also closed the week in the red, capping off a stretch of pretty wild swings. The latest economic data didn't help the mood either. Consumer sentiment from the University of Michigan fell to 50.3, the weakest since 2022, as people worried about the impact of the ongoing shutdown. Add to that Thursday's report showing October job cuts at their highest level in more than 20 years, and you can feel the tension building. And because the Bureau of Labor Statistics is closed for business, the official jobs report never came out. So markets are flying a bit blind right now, relying on private data, speculation, and vibes. On the corporate side, Tesla made headlines again, approving a $1 trillion pay package for Elon Musk. The plan sets some wild growth targets and puts pressure on Musk to actually deliver on his robotaxi and humanoid robot promises. The flashy hardware side of the AI boom. Still, the stock dropped more than 3%. So yeah, between layoffs, sentiment drops, and political gridlock, the week ended with a mix of fatigue and caution. Alright, that wraps up today's Capital Markets Quickie. Join me again Monday morning for more market updates. See you then.